friends, Chitra here. Welcome to my YouTube channel. How are you all? Hope you are all doing good. Today we are going to see the different chart patterns and how can we trade using those patterns. That is the rectangle pattern, symmetrical triangle, ascending and the descending triangle. So rectangle pattern means basically it is the resistance and the support level. So how can we enter into the long and short trade if the resistance and the support level is taken away. Next is the symmetrical triangle. Symmetrical triangle means price is in the consolidation phase. So either ways will get the breakout or breakdown. Ascending triangle is a bullish pattern and descending triangle is the bearish pattern. So we can look how can we trade and how this patterns is formed. Okay. Those who didn't join my Telegram channel can join the channel. It's a free Telegram channel. There I will be posting the Nifty and Bank Nifty live analysis and you can trade using those levels. And we can look into the video now. So first pattern is the rectangle pattern. So we can look in detail, that is how the rectangle pattern is formed and how can we enter into the long and the short trade. So we'll see what is the definition of the rectangle pattern. The rectangle is a classical technical analysis pattern described by horizontal lines showing the resistance and the support lines. It can be successfully traded by using, where can we buy? That is, where can we look for buying opportunity? We can look for buying at the support level and we can look for selling at the resistance level. Or else if we are getting any breakout at the resistance level, we can look for a long trade by waiting for a breakout from the formation and using the measuring principle. So this is how the rectangle pattern is formed. This means that price is consolidating at the particular level. A rectangle occurs when the price is moving between the horizontal support and the resistance level. So here we can see that the price is in between the resistance and the support zone. So the price is moving in between the support zone and the resistance zone. There is no trend in the market. The price indicates that there is no trend as the price moves up and down between the support and the resistance level. So this is called the sideways market, or the price is in the consolidation phase. When will the rectangle pattern will end? The rectangle pattern will end when there is a breakout. That is, we can see that there is a breakout in the price and price move out of the rectangle. Some traders like to trade the rectangles. Why? Because they can buy near the bottom and sell or short near the top. They can look for a buying opportunity at the support zone and they can look for a selling at the resistance zone, while others prefers to wait for the breakouts. This is the example of the rectangle pattern breakdown. Okay, here we can see that the price is in the consolidation phase. This is the support zone and this is the resistance zone. And once this support level is taken, that is broken, we can see that there is a fall in the price. Means we can look for a selling opportunity here. This is the Nifty 5 minutes time frame chart. You can find this rectangle pattern in any time frame, depends upon which type of trader you are. So go to the horizontal ray and we can see that there is a rectangle pattern. Okay, so this is the resistance zone and this is the support. So we can mark these levels. So this is the resistance level. Means price is not able to break this level. Okay, so this is the resistance. And this is the support. So price is in the consolidation phase. So if you are buying at the support, you can sell at the resistance zone. Okay. So we can enter into the trade. If you want to trade in between the resistance and support, you can do a selling trade here and you can buying trade here. You can look for a long trade here at the support and you can look for the selling trade, that is short trade at the resistance zone. Or else you can do a long trade at this particular level. We got a green candle at this particular resistance zone. So we can enter into the long trade. So after a long consolidation, price is breaking the resistance zone. So one can enter into the long trade above this resistance level. That is the after the rectangle pattern breakout. So this is the rectangle breakout. Okay, so the rectangle pattern breakout and we got a nice CE trade, that is we can enter into the long trade above this green candle. Next we can see what is called symmetrical triangles. A symmetrical triangle is a chart pattern characterized by two converging trend lines connecting a series of sequential peaks. So this is the first trend line and this is the second trend lines. These trend lines should be converging at a roughly equal slope. Trend lines that are converging at unequal slopes are referred to as rising wedge, falling wedge, ascending triangle, or the descending triangle. So, what is a symmetrical triangle chart pattern and how does it work? So, we need to know that in detail before entering into the trade. So, how is that pattern formed? The symmetrical triangle is a volatility contraction pattern. Okay, this means the volatility in the market is shrinking, that there is no movement in the market. So, we can see a shrink in the price, and a sign the market is likely to break out soon. We can see a breakout in the market. Now you are probably wondering, right? So how to identify the symmetrical triangle? We can see how can we identify the symmetrical triangle correctly. The side of the triangle slope equally. That's why it is called symmetrical. The triangle has higher highs and higher lows. At least two of each will be having that. It looks like a funnel. When you see that, it looks like a funnel. That is, price is getting squeezed, with the price squeezing from the left towards the right. Now the price cannot be squeezed forever. So how long the price can be squeezed? Either it should have the breakout or breakdown. So when you see, this is the lower highs and this is the higher lows. Okay. After that, we can see that there is a breakout in the price. So we will be entering long here after the breakout. This is the Bank Nifty 5 minutes time frame chart. So this is an example of symmetrical triangle. Means lower highs and higher lows are formed. So when we get any breakout, we can enter for a long trade above this green candle. So this is the place where we will be entering into the long trade. So what will be the target? Target, you can measure the length of the distance between the gap between this triangle is the target of the particular long trade. So we can put a horizontal ray here. So this is the target of the particular long trade. So if you are in the long trade, you can always trail your profits, or according to the risk reward ratio, you can book your profits. What are the characteristics of ascending triangles? Ascending triangle is a chart pattern that is used in the technical analysis. And how it is created? It is created by the price moves that allows for a horizontal line to be drawn along with the swing highs and swing lows, and that is a rising trend line to be drawn along with the swing lows. The two lines form the triangle. So we are drawing one line, that is one trend line at the swing highs and one at the swing lows. So we are drawing the two trend lines. Traders often watch for breakouts from the triangle pattern. So how will be entering into the trade? We'll be entering into the trade when we get any breakouts from the triangle pattern. The breakout can occur at the outside, or upside or downside. Ascending triangles are often called as the continuation pattern. Okay, since the price will typically break out in the same direction as the trend was in the place just prior to the triangle forming. An ascending triangle is tradable in that it provides a clear entry point, profit, target and stop loss levels. So when we enter into the trade, we'll be clearly knowing that where is the entry point, how to enter into the trade, and what is the target we have to keep, and what will be the stop loss if you are entering into the long trade or short trade. This is the ascending triangle, and here there is a resistance level, okay, and the price is coming down and price is forming lower highs, okay. So we will be entering into the long trade above this resistance level. So that is called ascending triangle breakout. So we will be entering into the long trade. This is a trend continuation pattern. We can see one example for the ascending triangle. So the time frame I have selected is 15 minutes. So the ascending triangle, descending triangle, symmetrical triangle, all these patterns we can see in any time frame, depends upon which type of trader we are. Okay, so here this is the resistance line and this is the rising lower trend line. Okay, because price is not able to break the previous swing lows and price is making higher lows. Okay, and we can enter into the long trade above this. Okay, and above this resistance level we can enter into the long trade. And what will be the target of this particular trade? The distance between the triangle, the gap between the triangle length is the target. Okay, so once we keep here the target, that is the height of this is the target. Okay, exactly the target got achieved and we saw the reversal from that particular level. Okay, so this is how we have to trade with the ascending triangle. What is a descending triangle? The descending triangle is a bearish pattern that is characterized by descending upper trend line and the flat lower trend line that act as the support. So the flat surface will act as a support. This trend line is a support and this is the upper trend line. The pattern indicates that sellers are more aggressive than the buyers as the price continues to make lower highs. The pattern completes itself when the price break out of the triangle in the direction of the overall trend. So this triangle pattern will complete when the price breaks the support level and we can see that there is a fall in the price. This is the descending triangle pattern. We can see that the price is consolidation phase and we can see that the price is forming lower lows and price is in the downtrend, and this trend line is the support line. So multiple times price is taking support at particular level, that is in the range. And after that we can see that there is a breakdown in the price, that is price is breaking the support level. So we can enter into the put trade, or if you are trading the stocks, we can look for a selling opportunity. This is the descending triangle pattern, and basically this is a bearish pattern. So it's a continuation of the bearish pattern. So this is a support line and this is the upper trend line. So it is forming lower lows. So when this support level is broken, that is taken away, we can enter into the P trade. That is, we can enter into the short trade. And the target is the length of the triangle. So we can measure the distance. Okay, so this is the target. So our target got achieved in this particular short trade. So this is the target. This is my Telegram channel. Here I will share my views on Nifty and Bank Nifty based on technical analysis. Post market, I will share the key zones for the next day trading. This is a free Telegram channel. In the live market, I will be sharing the key zones for Nifty and Bank Nifty, which will help you in our trading. Traders can make use of these levels to make the better decisions. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.